This is Steve Connolly.
And I'm Jason Miles.
And we are here with another fantastic Real Estate 360 show for you. Hey, Miles, what are we going to be speaking about today?
Well, it's like you talk about. It's one of those 4 questions that most investors have, and that's, how do you find the money? Where do you get money? How do you raise money? I mean, you go find a deal. Where does the money come from?
That comes second, right? You got to go find the deal first.
That's right.
And then you go find the money.
That's exactly right. So you got to know where the money is, though. So I think that a lot of times, there's different ways to kind of tackle the issue. How do you go after it? I mean, do you find the money first? Do you find the deal first? It's kind of the, what comes first, the chicken or the egg kind of thing.
I know what you're saying.
Yeah.
And here's what I have experienced over my, few years in the business. I go find a few. I go find the property. And here's what I have learned is if I can find a property that's a great deal, and of course, it might take a little while to learn how to recognize what a great deal on a property is. But if I find a great deal on a property, and I know what my formulas are, and we base everything on the formulas that the lenders want to see.
Right.
And we just use 70% of the after repaired value. And we talked about that a little bit last week, but we're going to talk about it, a lot more today. So I find a great deal on a property, and then I take it to a lender and say, I want to borrow 70% of the after repaired value on this property. And what I've learned is that if I get the right property and the right situation, money will flow to me like Niagara Falls.
Absolutely.
Coming over the cliff. You know what I mean?
Absolutely.
I mean, that's pretty forceful.
And it's not just the lenders. We're doing some things, and over the past few years, let's say, well, more than that, but we have.
You've been in this business for more than a couple of years.
Well,
Oh, okay.
But, we have, it's not just lenders. We have private lenders, private money, friends, associates now that we are working with. So it's not just going to a lender, because a lot of people, especially when they're just starting out, they're thinking lender, they're thinking credit, they're thinking, pay stubs, they're thinking money in the bank. They have all these thoughts, and a lot of times those attributes are not associated with the new investor.
I'm glad you mentioned that, because really what most people are thinking about is, I don't have enough money.
That's right.
To do real estate investment.
That's right.
Is that really a valid question?
Absolutely not.
Okay.
I had this conversation just last night with someone, and we were having this back and forth about, well, it wasn't much of a back and forth. It started off that way. And as you can imagine, I kind of dominated that part of the conversation at one point. But it was all about this person wanted to go, they want to get involved in real estate. She wants to get involved in real estate, and her first instinct is to go and get a realtor's license, and we, of course, touched on that before as well. But I literally just had this conversation last night. And she wants to be an investor, but the path for her, she believes that not just for her, but the path in general is to go and get a realtor's license first and foremost. So, she's going to spend, $400 or $500, whatever it is on this particular class, just to learn how to sell something in the MLS, right? Horrible situation.
It's a horrible situation, but I think it's because people mistakenly believe or think that they're going to learn how to be a real estate investor if they get their real estate license.
That's correct. That's 100% correct. And it's just so backwards from there.
Yeah.
But finding the deal is one thing. I mean, you'll have other investors tell you, look, don't look on MLS. We don't look for things that are listed. But your strategy, well, depending on what your strategy is, you can do anything. You can find them anywhere. I mean, we've found great deals on MLS. We've negotiated deals. We found properties that were overpriced on MLS. A great one would have been, do you remember the house that we did in Marietta and East Cobb? There were 2 of them over there, and they wanted $450,000 or $460,000 for them, and we negotiated them down to $350,000.
Yeah, absolutely.
But there was a listing there at $460,000 or $450,000. So we're marketing the property to investors, and investors, seasoned investors or moderate investors, they're going to look up the property and they're going to see the listing. So if I think we marketed it 400 or 425, but it was below the listing price. So that drives traffic actually our way.
Yeah.
So it's not a matter of not doing it. It's a matter of how you do it. But I digress.
A little bit.
Let's get to the money, right?
Yeah.
And another thing I think is important is that people have a tendency to ask for the money. I need $100,000. I need $50,000. I need whatever the number is. And, they just never get it when they ask for the money. Wouldn't you agree?
I totally agree. And the way that I know how you ask, you say, do you know anyone who might want to invest in?
Absolutely.
And I do that as well, but occasionally I'll pull out a flyer with a real estate, piece of real estate on a house or apartment building or something, and I'll say, look at this. And then I'll let people look at it and see what the returns are. And I say, if you've got some extra money, you might want to participate in this.
Absolutely.
I mean, I'm coming at it from the point of view, it's like, I don't really care. Somebody's going to invest in this.
That's right.
Because hey, the numbers speak for themselves,
Absolutely. And then once you have the relationships, we've obviously built relationships over the years. And once you have the relationships with the people with money, whether it's, private equity, private money, just somebody that has IRA, 401k money, or a lender, you say, hey, listen, here's this investment. Are you interested? What do you want to do? And if it makes sense, the deal will be done in a few days, maybe a week.
Speaking of the IRA, I was down at Advanta IRA. That's a free plug for them.
Free plug.
And they give free seminars on Friday afternoons, usually around lunch, and then give you food, so that's human bait.
That's right.
It's a pretty good reason to go.
That's right.
So I was there, and I mentioned it. I was sitting next to this lady, and I said, hey, I got this property. I did my flyer thing. And she came in to one of our properties, White Oak. She financed our little White Oak Avenue property the first time, first one, and made really good money. And then she only had like 40 or 50,000 to invest total at that time. Well, she sold a house in the meantime, one of her houses, and now she's got like $250,000 invested with us.
Exactly.
And she's ecstatic.
That's right.
And usually I call her up and she says, well, this money could sit here in the bank account, or you can make great returns with you guys.
That's right.
I think I'll invest it with y'all.
Listen, we have, there's a ton of money out there that is just sitting in IRAs, 401ks, just varying types of retirement accounts. One of the most important things to understand when we're talking about raising money in particular is that right now in the marketplace, there are, this year alone, there's nearly $1 trillion that has to come out of the market. Distributions that the first wave of baby boomers has to take out. They have to take it out, otherwise they're going to be subject to this ridiculous tax. So they've got to take it out. Doesn't mean they can't put it back in. It doesn't mean they can't put it in another vehicle of investment because they want to do that. The last thing they want to do is start blowing through their financial nest egg. I mean, they've got some years left to live. They have to finance this, right? But the point is that money has to come out and it has to go somewhere else. It has to go into another vehicle. So if you are now developing these relationships with people, because that's what it is, developing relationships, making yourself known, because they might not be ready today. They might not be ready in 6 months. It might be at the end of the year that they really know they need to do something because they can't wait any longer. And you just might have an opportunity for them to invest in because there's a lot of different things. So, but that's just one way, that you can start to develop your money raising skills, if you will, your ability to communicate with people and your ability to relay information in the right manner so that people can actually get it. Wouldn't you agree?
I totally agree. And that's one option.
It is.
You don't have to do that.
Absolutely not.
There are people out there that do that for you.
That's correct.
They're called brokers.
Yep.
and they don't go and develop these relationships.
That's right.
So they have people with money that don't know how to invest that money in real estate, and certainly they don't know how to invest it in what we would call investment, fix and flip properties, that sort of thing. They wouldn't know what to look for. They wouldn't know how to secure it, get the insurance, make sure that the person knows what they're doing, all those things that you would, as an investor direct, would probably want to do.
Correct.
You want to make sure that what you're putting your money into is of value, because they always want to look at it from the point of view of what's going to happen if the worst case scenario happens.
Right. And that's part of the security factor.
Exactly.
Yeah.
It's the security factor. That's where I was going with that. Thank you. So, cleared that pathway.
Sorry, I jumped right in.
No, that's
sorry
all right.
That. But I think it's very, very important, and it's extremely valid to point those things out. Now, this aspect of it for a new real estate investor or someone that's looking to get into it is a little bit advanced, but it's something that you truly want to think about. It's something that you want to have on your mind if you intend to grow your business. So raising money is key. You have to know how to do that. So invest some time into learning how to do that. Make sure that you're focusing on some of the other things that you need to. But I have to say, we've got one of our good friends, one of our business partners, someone that we work a lot with, coming up in the next segment.
Exactly. What's his name? Oh, it's Bob Rich.
And that's really his name. Bob Rich.
Rich Capital Funding. What a great name,
How lucky
for
was he?
a lender. I mean,
You got to love those parents.
I'm telling you what. So we'll be right back. So stay with us. Real Estate 360 Show.
We'll buy your house. Click 833willbuy.com. That's 833WELLBUY.com.
Or call 833-WILL-BUY.
Se habla español. Llámanos. Call us today.
All right. Hello. We're back. This is Steve Connolly.
And I am Jason Miles, and we are here with the man of the hour, Mr. Bob Rich, the man that truly does have a face for radio.
Thank you very much for that, Jason Miles. So I am Bob Rich with Rich Capital Funding, and we've been loaning money in the Atlanta area now for 6 years. We really help investors that are looking to either wholesale property or fix and flip property. We do all kind of financing for new construction. Got some great rates. We offer some terms I don't think any other lender in the Atlanta area can offer.
Yeah.
One of our key primary things that we do, if you're a wholesaler and you go out and find a property, sometimes we can team up with you and help you buy that property.
So
We've done a few of those.
We've done a few of those. Yes, we have.
But
Yes,
that's good. I mean, that's kind of what we're talking about today. Where to find the money for a lot of these new investors, even some seasoned investors that just don't have the liquidity. They know they've got a great deal, but it might cost. They don't have the 10% that might be necessary to put down. What do you do? What do you offer actually for that? I mean, I'm a guy. I'm out here, right? And I'm running a marketing campaign, and I find a property at 1234 Main Street, and I love it. The numbers make sense. I'm getting it at maybe 50 cents on the dollar. There's a lot of room in there, but I don't have the money to take this thing down because this buyer's ready to sell now.
So the problem is time, right? You need to close it right now. You don't have enough time to market it, tie it up, market it, fool around with it, have people come out and kick the tires and
That's right.
figure out where they're going to get their money and all that nonsense, right?
Yep.
That's where Rich Capital comes in. Let me ask you if you've heard
How
this
does that
story.
work? How does
If
that
you've
work?
heard this story, you find a piece of property, you go to one of your hard money lenders. 2 weeks go by, 3 weeks go by, 4 weeks go by. What's happening?
Absolutely nothing. You're losing deals.
I mean, it's just crazy.
They're thinking about it. They're getting the appraisal. They're asking you crazy questions like engineering surveys and stuff like that.
My goal
Yeah.
when I got into the lending business was to make it easier for investors if the deal is right. And I have market knowledge. I've been buying and selling houses since I was 20 years old. That's been about 40 years ago. And so I talked to my friends, and we raised some capital together. And so we make it easy for you to get into the house. As long as the value's there, you're a straight up person, we can do business with
So
you.
how do you do that? Now I found this property. You know, let's say it's worth $150,000. It needs $50,000 in renovation, and I can buy it right now for $40,000. But I got to get it right now,
Right.
and I don't have any money. And I want to wholesale it. How can Rich Capital Funding help me with this deal? What does that deal look like?
We have some great joint venture programs for people with no cash. So we can come in and fund the deal for you entirely. And, we divide the profits in a way that will help you get into the deal.
So what does it cost me to get into that? I brought the deal over to you, and we're looking at this joint venture deal opportunity. So I found this deal. I bring it to you. What does that look like for me? How much cash am I going to come out of pocket?
Well, I always get cash from you, Jason. But if
That's another story.
Yeah, but you don't pay as much as some people do. So anyway, what we would do is come in. I would personally go out and look at the property because I'm a hands-on lender, and we go out and look at the property. We assess the value of the property. We look at the rehab on the property. We look at the after repair value. All those things are going to weigh into our decision whether we can help you or not.
Right. And if you decide that you can, then what?
I can move very quickly. We get an appraisal or a BPO done on the property, and sometimes we don't even need an appraisal.
Why don't you tell everybody what a BPO is?
It's a broker's price opinion,
Okay.
and so we have some brokers that we work with in the Atlanta area that we trust, and
So you mean real estate brokers who will actually go and pull comparable sales for you?
yes,
It's kind of like a desktop, not appraisal, but a desktop valuation.
gives us a real value, especially if the broker is involved, is active, and doing a lot of deals herself.
Okay, so what's the advantage of that to me as a borrower over getting an appraisal?
It's a little cheaper cost, and it's much quicker.
Okay, fast.
Right. So going back to what I was saying, I need to know. I'm new at this, and I have this wholesale deal, and I don't want to lose it, but I don't have the money to buy it. I brought it to you. You've done the pre-work. How much does it cost me? What am I coming out of pocket, and how fast can I tell this person, hey, I can close you out in 7 to 10 days?
Well, Jason, if you don't have any money, then you don't have to come out of pocket with anything.
Really?
Yes.
Tell me how that works.
I can work that out. I can finance the cost of the loan. I can also, on a deal like that, though, I would want to be involved in the deal.
You're going to have equity.
I'm going to have equity in the deal.
Right. You're going to have
If
equity.
I'm going to fund 100% of the deal, I'm going to have some equity.
Absolutely. So, would that be like 50-50, 60-40, 70-30, or it just depends?
Depends on the margin.
Okay. All right. So if there's a $20,000 spread in a deal like that.
If there's a $20,000 spread in the deal like that, typically, we're going to be.
Can we define spread?
Yeah, let's define spread.
Absolutely. So
You get me a
here's
little
the spread.
confused.
Here's the spread, right? So it goes back to our formula, okay? Our 70% valuation.
Yes.
So in this particular case, the scenario is, the house is valued at $150,000. It's going to cost $50,000 to renovate it, right? So we're going to look at the $150,000. And we're going to take 70% of that. So 70% of that is $105,000, right? Right. So $105,000. Then you're going to back the cost to renovate it out of it, which is $50,000 more, which takes you now down to $55,000, right?
Right.
So $55,000 is what a lender will lend on that house. But if you can get it for $35,000, the difference between $35,000 and $55,000 is your spread, is your potential profit spread. Make sense?
Yeah, I mean, something like that, we could either buy the property directly from the wholesaler, or we can help them finance and get into the deal. Now, I gather a lot of private money.
Mm-hmm.
So my investors, over $20 million in loans originated. We've never had a default.
Yes.
So everybody we loan money to pays the money back, and my investors make a great return. And they know I'm keeping an eye on it from start to finish.
What do your investors make? Because, you can always use some more money to lend out. Is that correct?
We can pay investors 10%.
Okay.
Now, is that per deal? Is that per month? Is that per year?
It's an annual return.
Gotcha.
So you compare that to, stock market right now, you're looking at 6 or 7% on a really good portfolio.
Yeah.
Yeah.
You got to be almost
And
a whiz kid to get your 6% out of the stock market.
And the way I've always looked at the stock market, One of my investors, in fact, that's given me several $100,000. He lost over $100,000 in the stock market.
Yeah,
He's already made that back with me in 2 years.
for sure. I mean, we've got you're familiar with him. We've got a former attorney that we work with
Yeah.
who would prefer to put every penny of his money to work with us as opposed to putting it back in the market and dealing with those fluctuations.
Yes.
And keep in mind, you got to keep in mind the fact that we haven't had a significant correction in the marketplace since,
2007 or 8.
yeah.
Somewhere in there.
So, and of course, we're not going to see anything. I don't believe we'll see anything as significant as that, but we will see a market correction because they're necessary.
Yeah.
The market has to correct itself, and those folks are going to see some dips in their values of their portfolios.
Absolutely. But the great thing about our loans is they're short term.
Yeah,
We're not looking at future value. We're looking at today's value. So anybody that invests with Rich Capital that wants a great return on their money, we can certainly give them a very secure
and it's
condition.
stable.
It's very stable.
It's stable.
Everything is secured. The property secures the money loaned with a deed secured debt and note.
Will
Things
Rogers, he's a philosopher from early 1900s, said, I'm really more concerned with the return of my capital investment, more so than I am with my return on the investment. So he was really, interested in, well, what's the security? What happens if everything goes wrong? Now, in the stock market, have you ever had a stock go to zero? I have. Guess what's left over for me when a stock goes to zero?
Absolutely nothing.
Nothing. Absolutely nothing. There's no security there. The same thing with mutual funds. Your mutual fund goes down, guess what you got? Oh, you got some nice pieces, colorful pieces of paper, and that's it,
Yeah, for sure.
Now, with real estate, you not only get security because you're recording the security deed and note against a physical, real piece of property.
Yeah.
So if I don't make the payments, you foreclose it on behalf of your lender, and they get the property, or they get all their cash back if it sells at the steps.
Just a real short scenario on something like that. Let's say we've got a property that's a $100,000 purchase, it's $50,000 rehab, and the after repair value is $250,000.
Okay.
All right. What happens if we loan $150,000? Right?
Yeah.
Right.
We loan the $100,000 for the purchase. We do the $50,000 for the rehab, but that money is dispersed as the rehab is being done. So it's super safe.
Right.
And then we got a $250,000 property over here. For whatever reason, if it doesn't work out, we've got $100,000 equity.
That's correct.
Exactly.
And here's the good
That's
thing
security.
about that.
That's what that
That
is.
is
That
security.
is security. Now, we've spoken right now about how a newbie, someone with no money, can come in and partner with you
Yes.
for all intents and purposes to actually start making money. So even if they have nothing but the deal, they have no money, they can make money with you just by finding deals.
Absolutely.
Right?
Great thing about Rich Capital is we have a team.
Of course.
You guys are part of my team.
That's
Yeah.
right.
Right.
I mean, I look at it like we're business partners. I mean, we make
Absolutely.
money, you make money. You make money, we make money. That's just how this goes. But Rich Capital just doesn't work with wholesalers. Rich Capital also works with seasoned investors that need renovation money. And you have rates, as I understand, as low as what, 10.5%?
Yeah, even lower in some cases. And the great thing about our programs is you're a seasoned investor. I can get you a fix and flip loan, and you're paying interest on the principal amount only, which means most hard money lenders, you borrow $200,000, and $100,000 is purchase, $100,000 is rehab. You're paying $200,000 note from the very, very beginning.
Even though you
With
don't
me-
get that money.
With me, with certain programs, you only have to pay on the principal.
That's right. So
That's $thousands of savings.
you guys listen. This is Bob Rich with Rich Capital Funding. His information is definitely going to be tagged here. You got to reach out to him regardless of where you are in your investment strategy. We've got to take a break. We'll be right back. Do you need to sell your house? Well, our company will buy your house. We make the process very fast, very easy, and it's all cash. All you have to do is give us a call today.
We'll buy your house. Click 833willbuy.com. That's 833WELLBUY.com.
Or call 833-WILL-BUY.
Se habla español, llámanos, call us today.
Welcome back. This is Steve Conley with the Real Estate 360 Show and
I am Jason Miles, and I really enjoyed our segment with Bob. But for me, he left me with a lot more questions. If I'm a new guy,
Right.
he left me with a lot of questions, right? Or even if I'm a seasoned guy that's looking for another opportunity, another finance company to work with. Of course, we know what he does. We work with him all the time. But he really does have some interesting things. And he touched on a great point, and I wanted you to kind of clarify that if you don't mind.
Right.
He touched on a great point right at the end where he said, in essence, what he said was, you pay interest on only what you borrow as you borrow it and not all of it from day one.
Exactly. And of course, he's talking about a renovation loan.
Right.
That's what people call a fix and flip. They go buy the house, they fix it, and then they retail it on the open marketplace.
Right. Or hard money.
Hard money
Yeah.
or private money or
Right.
whatever. Let's call it hard money in this case.
That's fair.
Yeah.
That's fair.
So suppose it is a $200,000 loan, let's say on a $300,000 retail value of a house, so that fits the numbers.
Right.
300 times 70% is 210. Say you put 10,000 down and they lent you $200,000.
Right.
100,000 purchase. I think these were the numbers he was using. That's why I'm using them.
Right.
$100,000 purchase and $100,000 renovation money.
Mm-hmm.
So obviously you need the $100,000 right away to buy the house. So you go to the closing and you spend that $100,000, but now there's $100,000 that's sitting in escrow. The lender's not going to just hand their investors that money. They need
Right.
that for the security.
Which is a big misconception by a lot of new investors as well.
Exactly.
They believe when they get these loans for the very first time, these hard money loans or private money loans, when they get these hard money loans for the very first time, they believe that the money will immediately go to work for them in terms of starting to pay for the contractor services, the
Permits,
all of that.
materials,
What
all
they
that.
fail to realize is this is a pay it forward system.
Exactly. Now, of course, to clarify that, so now we have the loan, we bought the house, we went to the closing, there's $100,000 for renovation, but it's not, say if I'm the buyer, it's not in my bank account, it's in the lender's escrow account or the
Right.
attorney's escrow account, whoever's holding that money.
That's right.
And guess what? They're not going to give it to you until you've actually gone in and done some of the work. And then they come out and inspect it. They come out and inspect the property and inspect the work to make sure that work is done before they start releasing those funds, because guess what? Their valuation is based on the after repaired value.
Absolutely.
So that house is not worth $200,000. As it is, it's worth $100 because you paid $100 for it.
That's right.
It's worth $100 as is, and to get it to be worth $300, you got to spend $100 to get it to be worth $300. So they don't just hand you that money.
That's right. But when you bought this house,
Yeah,
or when you got the financing, the finance company put $100,000 in there for the sale. The other $100,000 stayed in the escrow account.
correct.
You're with Bob. You're only paying interest on the $100,000 that you actually used starting from that day.
I'm
You're not
getting there.
paying on the whole two, right?
That's right. I am getting there, but I'm just kind of laying that foundation,
Yeah.
so that people understand. You said the pay it forward system. So,
Right.
so you've got to have enough cash, to get rolling on these properties so that you can get to the draw.
Right,
So
right.
you've got to have $5,000 or $10,000 or $15,000 to get your materials bought in your first stage. But back to what you just said, and I'm telling you, listen, I've been doing this for a while, and it really hit me what a huge difference is. I mean, huge difference it is compared to paying your 10, 11, 12, 15% sometimes
Yeah, well, yeah.
on $200,000 compared to, your monthly payment on that compared to 10, 15% on $100,000. It's half as much.
That's
Let's
right.
just think about that. And, sometimes I have to personally, just the way I am, I have to actually experience it to see the difference. So I did some of these with Bob where, or we did some of these with Bob, and you've done it too, where we were writing the checks for half of what we would normally do compared to a hard money loan.
That's correct. And just mathematically to put it out there for people, if you're paying, let's keep it simple, at a 12% interest rate on this initial $100,000, so that's 12% interest only over the course of a year, right?
Yeah.
So on $100,000 that you borrowed today, that is roughly $12,000 over the year, or $1,000 a month. If you, of course, add that other $100,000 in, which so many, for the renovation budget, which so many lenders will just do, they're earning interest on money they haven't even deployed yet, but now they're getting $2,000 a month.
Right.
Right? Because it's double. $200,000 at 12% is $24,000 a year, or $2,000 a month. Right?
Absolutely.
So that is the big difference. Now, you definitely want to know that towards the end of your loan, you're going to be paying that $2,400. But it's a sliding scale from month to month from there, because initially you've only got the $100,000 for the purchase of the house, for the acquisition of the house. Now you have to go and do the work. And if you, like you said, you start with, $10 or $15 or $20,000,
right?
Just putting it very easy, because you don't always get all of it right back, but you put it out there, maybe you put 20 out and you only get 15 back. Well, if you're doing that once a month, and of course you want to do it more than that, but just to keep it simple, next month when your payment is due, you've used now $115,000. So you're going to be paying 12% on that $115,000 annually divided by 12. So your payment slightly goes up, maybe a couple $100.
Right.
Right.
About 15%. Yeah.
Yeah. So just a little bit, every month it's going to go up, but it makes it a lot easier for you to get into these deals and preserve the thing that we all want to preserve, which is our cash.
Absolutely.
Right? We want to use as little of it, but at the same time we want to pile it all the way up, right?
And that savings will go straight to your bottom line profit.
Yeah.
When you sell that house, because this is not really a temporary savings. This is real money savings.
That's right.
You would not have to. You don't have to spend it.
That's right.
So,
and if you're doing multiple, even in this particular case, if it takes, let's say it takes 6 months.
Yeah.
To, from the date you close it on your acquisition to the date you close it on the retail sale.
Right.
If you're just looking at incremental increases, and your last 2 months were $2,400 just because of the whole time, right? But incrementally, you paid on average, let's say, $1,500 a month for the previous 4 months.
Yeah.
Right? You're looking at, or let's just call it $1,800 averaged over the 6 month period.
Let's round it off and say you're saving 25%.
Yeah, you're saving $600 a month. That's $3,600 on that one deal.
Yeah.
If you're doing multiple deals on an annual basis, if you're doing 3 or 4 deals, you just made yourself another $11,000.
Now I got to say this. Let's switch hats for a minute.
Yeah.
Say, okay, we've been talking about it from the buyer's point of view, but I'm a lender.
Yes.
I like the first option better. Absolutely. I like it a lot better.
Which is probably why the vast majority of them charge the super high interest from day one.
And you know what? In a lot of cases, as a borrower, I am willing to pay that if there's enough money out there in the project. If there's not, then I'm not.
Right.
But if there's enough, I don't mind spreading the wealth a little bit, because, hey, I understand everybody wants to make some money.
Yeah. Well, it's a pay-to-play society that we live in,
Hey, we're here to make a profit.
That's right.
Let's just talk about that, for a second. We're not here for any other reason. Well, we're here to have some fun.
For sure.
This is a lifestyle. But
real estate lifestyle, baby.
It's a lot more fun when you're making money
than
it is when you're losing money.
That's for sure.
Yeah.
And that contrast is so significant. I mean, and we've been in situations where we've not made as much money as we wanted to make on deals. And in some deals, we've actually even lost money on because of, changes in, the local political structure as it relates to permitting and so on and so forth, or from hacks, things of that nature that slow down the process. I mean, those things are totally out of your control, but they can really, really eat into your bottom line. In fact, they can just
destroy it.
Yeah, just gone. and now you're feeding the monster.
Yeah.
And there's really only one thing. Well, there's two things you can do. You can continue to feed the monster and figure this thing out, or you can hurry up and sell that sucker and do what you need to do.
Sucker is a good term for that, right?
So, but having that good lender, man, is so vitally important. And I am something. In fact, you made the connection for us with Bob Rich.
Yeah,
So,
I did.
it was so great to be able to sit with someone that's a straight shooter. Mm-hmm. Is going to tell you just what it is. He's not trying to get rich off every deal. You're not going to be paying 6 points with him, generally speaking.
No.
And he just makes a small amount off the spread. So I really enjoy working with a guy like that.
I love working with him too, and he's pretty flexible, because he realizes that not everybody knows everything, and so when I met up with Bob, you and I were really doing a lot of wholesaling.
Yeah.
And I said, listen, Bob, what I need is a wholesaling program, because you only have fix and flips programs.
That's right.
So he said, well, what do you want? I said, I want something that's zero down, and you give me all the money, but I'm going to give you a higher more points on the front end. We didn't even talk about the points, but the points on the front end, and I think we're out of time, but we'll talk more about that.
No, we've got a couple seconds here.
Oh,
but,
do we?
Let me just say this kind of to piggyback off of that. When you're building your team, right, for a new investor or just someone who's out there kind of freelancing, you need to have a team. You need to have people in place.
Yeah.
Having a solid lender, not just your mentor, right? A mentor is obviously important. We all need them, but having a solid lender that's going to really walk you through your processes is vitally important. But let's take a break and talk about it a little more.
We'll Buy Your House. Click 833willbuy.com. That's 833WELLBUY.com.
Or call 833-WILL-BUY.
Se habla español, llámanos, call us today.
And we are back. This is the Real Estate 360 show, and this is Steve Conley.
And I'm Jason Miles.
And we were talking about, before the break, Bob Rich and Rich Capital Funding, and the fact that he is very open-minded to different ideas.
Yes.
Because, Bob is a great lender. He's got some great contacts and money. And then we want to talk about that a little bit. So if you guys have some extra money, you should contact Bob, and we'll talk about that.
Yeah, the extra.
Extra money. That's right. So before the break, we were talking about this wholesale program that he and I put together.
Yeah.
And I said, listen, Bob, there's so many houses out there that I want to buy that I need help. And I said, let me have all your money.
Because you can only tie so many up with contracts, right?
Exactly. So thank you for that. And that's a good distinction. Wholesaling is, writing contracts, putting your earnest money down, or getting somebody else to put their earnest money down and holding it. But hey, we needed more time.
Yes.
That's the critical factor. And I said, listen, I just want to buy this stuff because I need the deed. That's a good one.
That's a good one. I like that little quip
we
right
need
there.
the deed.
You're going to get some T-shirts made up. Need the deed.
So in order to get the deed, you have to buy the property.
That's
so
right.
I said, I'll give you more points, and but I want I'll give you more points, a shorter term, instead of being in these things for 60 to 90 days, and getting 2 to 3 points on the front end. I said, let's do this. Even if the points were the same, let's say 3 points.
Yeah.
And you had the loan out for a year, that's 12 months, of course. You get 3 points on $100,000, that's $3,000, right?
Right.
So I said, instead of that, I want your money for 90 days. I'm not going to fix the property. I'm not going to do any of that. And I'll pay you 3 points, but guess what? I'll pay it off within 90 days.
Yep.
And then you multiply it. So that's only 90 days. So you can do that 4 times in a year. So
That's right.
now instead of
12%.
$3,000, you've got $12,000.
Yeah.
And your interest rate's the same on the money that's deployed. He said, yeah.
Because at the time we were scouring the universe to try to find this bridge capital, right?
Absolutely.
I mean, we were dealing with people in Ohio, Florida, California, New York, New Jersey, just to find this program. And even our explanation of this proposed program that you put together with Bob, even our explanation to seasoned lenders, seasoned hard money lenders, they just couldn't wrap their head around it.
And they have their programs.
Yeah.
I understand that. And, you know, they've already presented their programs to their lenders. And so they've got a system to follow. So that's why we need somebody like Bob, you know.
Because
Bob's
he's smarter.
Perfect.
It's that whole battleship thing, right?
Yeah.
It's that, you know, the battleship has to do this, go 50 miles to turn around to do a U-turn, and a tugboat can do it, you know, at the drop of a dime, right? But it's that kind of thing. I mean, if you go to one of these big hard money companies that have the capital to be creative, their systems don't allow them to be creative.
That's right.
So it's just too big. They're too big to change that fast. Whereas Bob, for all intents and purposes, is a one-man band. I mean,
Pretty
not
much.
really, but he's the guy that you're going to shake hands with when you want to do the deal. He's the guy you're going to talk to on the phone when you're going through your deal. He's the guy that's going to come look at the renovation work that's been done on the property when you put in your draw request. So he puts in the work, but he's open-minded enough, as you said, and he's small enough to deploy money in very creative manners.
And, you know, when you're out in the business, when you're actually stepping out and doing stuff like this, these things start to come to you. This is how I met Bob. I was at another closing.
Yeah.
I was buying a property from this wholesaler.
Yeah.
And so I walked in, you know, we signed the papers, and Bob is sitting there, and I listened to him, and he's talking to this guy, and I realized that Bob is kind of the lender on this deal.
Yeah.
And he's done some bridge funding.
Mm-hmm.
And so I didn't just start talking to Bob. I went to this wholesaler and I said, "Do you mind if I speak to this guy here?" He said, "No, go ahead. You know, he's our lender."
Mm.
So I talked to Bob, and I said, "Bob, I want to talk to you about, you know, providing some capital."
Yes.
He said, well, gosh, that's perfect, because that's what I do.
Yeah.
You know, that's my job.
Yeah.
And so my point is that once you get into this business, you start developing more and more resources.
Yes.
And the great thing about that is, you know, you're listening to us, you're getting ideas, and you're developing resources. And you know, we have seminars that we do, and we do mentoring, and we do all that. So
we've got one of those coming up pretty soon, don't we?
actually, we do. I'm glad you mentioned that.
Me, yeah. Okay, I'll take credit.
Yeah, we actually have a seminar coming up, and we don't do seminars like most people. You know, we actually provide you with real estate education, real estate investing education for 2 solid hours.
And resources.
Absolutely. And we do it on the cheap, honestly. You know, normally those 2-hour seminars are going to cost you $300 to $1,000, you know, from most people.
Right.
We charge, okay, are y'all sitting down? $20, you know.
That's right.
$20. And it's all education, and we're not selling another seminar either. We're not doing that.
There's no upsells, nothing like that at all. And even the $20, it's more of a commitment than a profit. I mean, these things aren't. We don't make money off of this, you know.
Oh no!
So
wait a minute.
These are round table events. You know, there's going to be anywhere from 10 to 30 people in the room. We keep them that small so that we can interact with you, so that we can understand what your need is, and can offer you the information and the processes that'll help you get through whatever it is you're going through to get to where you want to be. And we're just simple like that. It's not a matter of, you know, trying to sell you real estate either, you know, because a lot of people will do that as well. A lot of, you know, I've seen a ton of them when you go there and, you know, there's some upfront fee, and the next thing you know, they're pitching you their properties for one thing or the other. And that's fine. I guess that's their thing. But, you know, my thing is to create independent recipients of wealth, if that makes sense.
Yeah, it makes sense to me.
You know, I want to give what I have when it's information, because I'm only as wealthy as what I can afford to give away, right? So That doesn't mean I want to give you what little bit of money I have in my pocket, but it does mean that I want to fill you up with the information that you are going to need to find success in this particular life of
Right.
real estate, and that's what we do, I think.
It is, and we're kind of new age in the way of our marketing and our approach, and we believe in giving and giving and giving.
Yes.
And we also know that a lot of people are still going to need our help down the road.
Right.
And, we're going to be there. Gives us an opportunity to maybe joint venture with you, connect you up with Bob, or yes, we're going to have some programs that are going to be available for sale online. So you can buy those if you like, because there's so much stuff involved in real estate. It's not just buy a house, fix it, and sell it.
No.
Not at all.
Not at all. And it's an ever evolving thing. And, we're talking about, wholesaling right now. We're talking about where to find the money, how to put these things together, what kind of processes do you need to implement. That is all great. But ultimately what is going to happen as you, start to progress in your real estate lifestyle career, if you will, is you're going to come in like we did. We came in as wholesalers. And we did that, and then we wanted something else because, it's deal after deal after deal. That's how you make your money. If you can't go to work, you're not making money. And you're just not. You got to go and look at the houses. You got to get on the phone. You got to be out there to meet people and network. So it gets to a point where you're like, okay, I need to make a little bit more money so I have the cushion. And then the natural progression for most people is to go right into the fix and flips, right?
Yes.
So we go from making, $3,000 to $5,000, $10,000 a deal to, maybe $30,000, $40,000, $50,000, $60,000 a deal. And it all sounds great and it all looks good on paper, but what happens when you make more money?
I don't know.
You spend more money, right? Even if you're reinvesting it back into your life or to your business, you might not go and buy, the big car and take the big vacations and buy the name brand, everything. You may simply just buy more real estate, which
that's what we're doing.
Exactly. But it gives you more bills, right?
You may, yeah. Instead of doing one renovation, you might be doing 13 or 14.
Exactly.
Like we're doing,
Exactly.
Or you might be buying, apartment buildings and stuff like that.
Well, right, which is another progression, because now you're starting to look at, opportunities for passive investment. What can I do today that is going to continue to pay me month after month after month after month after month? Instead of doing one deal at a time to make whatever money you make, you do one deal that pays you for the next 3 years, 5 years, 7 years, 10 years. These are all valid options, and there are multiple ways to do everything inside of what we just talked about. I mean, how many different ways are there to wholesale?
I don't know.
Exactly.
Unlimited number of ways.
So there's just not one way to do a thing. There's a lot. And that's the whole purpose of doing these events. That's the whole purpose of being accessible to people, period, to talk about these processes and these scenarios and be able to share.
Sure. Absolutely.
And willing.
And this seminar, by the way, is July the 13th at 10 o'clock. It's going to be at Shared Space on Herodian Way in Cobb County. Smyrna, right?
Let's say it like that.
Right up there near the SunTrust Park. So, 2 hours with us, and for $20, I think that's a pretty good deal.
It is. I mean, if it was an auction, who knows what I'd go for? I'm just saying. It could be a lot.
I'm speechless. I don't know what to say. I'm thinking $1.95.
I was going the other way.
Start the bidding. Anyway, I think that's about it for us for today.
Absolutely.
So we appreciate you being here for the Real Estate 360 show. And listen, we want to take you from the show to the pro.
Amen. And make sure that you get Bob Rich's link. It'll be associated with the description here. And check us out next week. We look forward to talking to you.